Hi, welcome to the Market Alert for Wednesday 10th of October 2018. So yesterday the pound was fairly quiet. It moved lower to begin with. Here you can see we've got a double bottom in place and then a 62% retracement back to the 130.50 level, which is the blue line here, psychological one. Market shows an increase in volume. It's subtle in this price bar. And then you see the buying coming into the market, a bit of profit taking at the 131 level, and then eventually we drive through to the 131.50, where the market is currently trading above at the moment. Also notice here the market taking out the 200 bar moving average and also using this as a support to sit on when prices came back, which is also the DP level as well. So in the bigger picture, the market heading up, it's showing at the moment that it is bullish. 132.12 is the next upside target for this market. And yeah, let's see what happens. That's about as much as I can tell you because we've got all of the signs. We're above the 20, the 50, 200 still to be targeted and taken out. But in between all of this, we've got these price levels as well. But at the moment, certainly bullish for the pounds. What have we got? This manufacturing GDP for the UK at 9:30. Interesting, this one will affect the pound. 0.1% forecast for GDP, 0.3 previous. Brexit will be blamed for this and uncertainty and any other nonsense they can come up with to justify it, when really we are sitting in peak debt globally, but that's ignored, of course. Over to the US at 1:30 for PPI Treasury Currency Report at 10:03 p.m. this evening. Never heard of that before. That's a new one on me. And then they're wheeling out a minor FOMC member, Bostic, who's speaking at 11 p.m., which of course the markets will be in their overnight session by this time. Big picture on the Dow, market sideways, having tested the 26,347, come back above this, struggling with the 76% retracement at the moment, the market closing below this yesterday and trying to come back at the moment. We'll look at this in more detail in just a moment, but yesterday, fairly quiet day. Tuesday can be quiet, as you can see here. Market moving lower to begin with, and then you see them buy the market back and then bring it back above the DP level, and then drive it through the 200 bar moving average to the previous day's close and also the previous day's high. So all of these, as I mentioned yesterday, the high would be interesting, and it certainly proved to be the case. You can see the selling here with the increase in volume. Market brought back, and you can see it's range bound. It's just once it got through the 26,500 level, and that's where it's sat, 76% retracement back up, and that's all it's really done. And you can see how tight the averages became overnight here before they broke out to the upside. Markets come back, but it's above the DP level until, let's see, 3:45 this morning, around there, 3:30. And the market's now making its way back above the DP level and the 200 bar moving average. So slightly bullish, which is what you're seeing here. But don't discount the 26,483 for the market showing some sort of weakness at this level. Meanwhile, in Bitcoin land, the market remains sideways, so not a lot to report here. Still between the two channels there, and there is a smaller channel actually inside of here now, so narrowing, coiling itself, as we used to say years and years ago. If the market coils into a spring, the tighter the spring, the more energy that is actually created and stored, and then when it breaks out, it will be big, depending on which direction it breaks, of course. Hopefully there'll be a shakeout to the downside, and then we'll see prices moving back to some really decent levels and some volatility coming into the market. So you've got that narrow channel there in this market at this time. Okay, that will do it for this one. If there's anything to report, I will let you know. Not much news apart from the GDP figures for the pound at 9:30. That will be interesting, actually, to see how that's interpreted and who's to blame if the figures come out as forecasted at 0.1. We'll wait and see. Okay, that'll do it. But as ever, thanks for watching. See you in the next one.